You're watching us here on Chartbusters. Let's talk about a couple of managements and a couple of earnings as well. Havells India reported what was a weakest set on the top line for them. A 6% growth is what the company reported. So let's get chatting with the management of the company itself. Mr. Rai Gupta joins in to detail what the quarter went by and, more importantly, what the quarters ahead look like as well. Thanks a lot, Mr. Rai Gupta, for joining in. The first thing is with regards to your cable business. Could you split the volume and value growth in your cables business this quarter? Because I was looking at a couple of your competitors, they actually grew much higher. So wanted to understand that for you.
So if you look at the cables and wires business, our focus is more on the domestic wires business, which is contributing to almost 60% of the category, wherein we saw some low consumer sentiment as well as low residential demand pickup. On the other hand, the industrial cables business has done well. The growth has done better here. And overall, we were constrained a little bit by our capacity constraints as well, wherein we have a new plant coming up in the next year. So cables and wires, volume growth is higher than the value growth that we have, overall growth that we have, because raw material prices have abated. So overall volume growth is more than 10% in this category.
Oh, okay. So all of the growth that you're seeing in this segment is because of volumes then?
That's right.
And given the fact that we had Polycab yesterday on the channel and, maybe the mix is a little bit different, but they grew at a higher clip, more than 30%. So have you lost some market share?
We believe that as far as domestic wires are concerned, we are maintaining our market share. And, as I said, the industrial cables is a very small business for us as compared to many other people, where we are constrained by the capacity constraints.
So just wanted to understand from a strategic standpoint, would it make sense for you to chase growth in the industrial segment also while you are a leader in the domestic space? Would you want to look at positioning yourself in that market as well?
I believe, it takes time, and one of the main strengths of Havells has been brand and distribution. Underground cables is more of a commoditized product, and though we cater to that segment, it is not a big segment for us.
Okay, all right. Let's focus on a smaller segment then, the ECD segment. Out there, we saw a decline. Is it because the festival season has shifted more into mid-Q3 in comparison to Q2? And do you believe that for the year, you'll still see some growth for ECD for the year, that's FY24?
Two things. One, over the last quarter and last 6 months, we have seen consumer demand not picking up to the extent that we were expecting, because the raw materials were abating, the price increases have abated, which were very volatile last year. So we were expecting a better consumer demand in the first half, which has not played out that well. Also, the fact that this festive season has shifted into the third quarter. So going forward, what we expect is a better consumer sentiment, as well as with the seasons coming up, whether for the festive season or the summer season, we should see growth both in the consumer durable segment as well as the Lloyd segment as well.
All right. What's your outlook on Lloyd's itself, the rate at which it is likely to grow? What's the kind of market share that you have gained over the last couple of quarters? And for how long do you invest before breaking even?
Well, as far as Lloyd is concerned, still the majority of the business is air conditioners, where we are gaining market share quarter on quarter. Even in this quarter, within the categories, ACs has grown the highest. And though it's a small quarter, but I think over the next, when the third and fourth quarter, when the volumes start kicking in, because it's the lowest quarter, the second quarter, we'll see margin expansion also coming up in the third and fourth quarter, and definitely, much better in the next financial year. But we'll continue to invest in brand building, R&D, manufacturing. That investment will continue to be there.
When do you break even on Lloyd's? Which quarter?
So as I said, we are looking at margin expansion and fast market share growth in this segment. It's a huge market, and yes, I would not give any time to the break-even number, but we are looking at margin expansion in the coming quarters.
Mr. Gupta, but let's try to put at least a broad period to it, because in a cash-22 situation, you want to grow more, you have to spend more on advertising, but those, so top line is growing well as we have seen. But should we say first half of FY25, we see a break-even on Lloyd's?
As I said, you keep pushing me. I'll not give you a timeline because we don't give guidance. But the fact is that, as I think you may take this thing that we will continue to not only gain market share, but also expand margins. So that should help in, reaching break-even faster.
All right. And the second half of this year, obviously, as per you, will be a lot better than the first half that went by, right? With margin expansion across the board?
We're expecting that, yes.
All right. Wish you good luck, Mr. Rai Gupta, for joining in and giving us all those details on your numbers. And we will speak with you at the end of your next quarter as well. Hopefully, the festive season would have brought a lot more cheers to your numbers as well. With that, we'll slip into a short break. Thank you for watching. On the other side, we'll get chatting with the management of Jindal Stainless.